Ramaswamy sir, respected ex officio immediate SARC past chairman of SARC CA DC Jain sir, respected secretary CA Manimegaling madam, respected management committee members, senior members, fellow members, past chairman, senior members, fellow members, junior members, good evening to all. We welcome the respected speaker and all the participants to this meeting. We thank the vibrant leader, GR sir, for immediately accepting our invitation, even now in third corona period, and for being here with us to speak about budget session 2022. We are also very eager to be watching your presentation, sir. Thank you, sir. Now I request the respected ex officio DC Jain sir to give special address.
Thank you, Monu Sundaram sir. In fact, before we get into this subject, a few words about our past president, CA G. Ramaswamy sir. In fact, last 10 years, every time we have been trying something or other came. In fact, for the benefit of everybody, in one of the budget, we actually fixed him. We said, sir, it's been a long time you speak, and he agreed also. Unfortunately, that budget had some only 10 amendments. He said, it will just get over in 5 to 10 minutes. Is it really worth that we have a meeting? And we actually dropped that meeting. So now this time when the opportunity came, I thought, whatever be the amendments this time, I think we'll have to bring back, because he was one of our regular speakers when it came to budget meetings. So we are very, very fortunate to have you amidst us, sir, actually. And second, I would like to share a happy news to all of you that SARC and SICAs of SARC have both bagged the first prize, actually. A proud moment for all of us in the South, that back-to-back last year we got, and this year also we have bagged the first prize from ICAI Delhi, actually. And coming to the subject per se, the budget comes with a lot of expectations. And I only recall one of the cartoons by Shri R.K. Lakshman, who gave one cartoon in 1989, which I did put in Madurai branch group also, telling that my reaction to budget, I don't know, I don't read it. But anyway, you can say that the poor are let down, the salary class is hit, and it is a sellout to rich. Probably that's the common perspective which all budget has. It is pure because of the huge expectations we have. But let me tell you, friends, though the budget looks that there are only few changes or few amendments which have come, there are far-reaching impacts when you go through the fine print. And one has to kind of go read line by line to see that nothing is getting missed. Those are the implications. And also, though the government promised that we will not go for any retrospective amendments, but then it becomes actually difficult when it wants to protect the revenue. One such thing where the prospective amendment has come is the allowability of cess and recharge, the sell and surcharge, actually, where a lot of Supreme Court judgments told that it's only income tax which is not allowable. Cess and surcharge can be allowed. Now they have come with a retrospective amendment so that all the old things will be revamped, actually. So we know that whenever a Supreme Court judgment comes, there is always a legislation which followed to overcome that, actually. And coming to the picture which the finance minister wanted to give is we can catch by the usage of the words which were used. This time the most used words were digital, infrastructure, and health. Probably the FM used digital 34 times as compared to 6 times last year, actually. So that shows that the thrust of technology is given more this year with the introduction of the taxing of the virtual digital asset, as well as going for e-passport and introduction of the digital currency. We can see that a lot of technological advancements are being taken place. And if I were to give the broader things for benefit of everybody, they have called it as Amrit Kal, which will be achieved by 4 probably mainstreams. One is Gati Shakti, second is by inclusive development, third is by productivity by enhancement, and third by the financing of all they want to achieve. So they have given the budget for the next 25 years. There is always a lingering thought that what about the present? The present has somehow been missed, actually. Maybe if we being professionals, we understand that when the finance minister presents the budget, a lot of limitations or the other factors which they have that does not make them come with things easily. Probably we expected some more things where some tax rebate or some chapter 6 reductions enhancement was there, which was not there. But probably we'll see that in the coming budget that gets carried on whenever there are elections due for the government actually. And we are very keen to listen to our beloved past president, G. Ramaswamy sir, who is going to unbox what the budget is all of us had for us actually. Thank you.
Thank you, sir. Even though dear sir is very known to all of us in Madurai, as per protocol, I request Secretary Madam to introduce the speaker. Unmute yourself, Madam. Madam, unmute yourself.
Good evening, respected Speaker of the Day, CAG Ramaswamy sir, and respected members of Madurai branch. On behalf of Madurai branch, it's my pleasure to welcome you, sir. And it's my pleasure to introduce you to Madurai members. CAG Ramaswamy sir, past President of Institute of Chartered Accountants of India and past board member of International Federation of Accountants, ICAI, USA, for the period 2011 to 2014. He's born in Coimbatore. He's a commerce graduate, graduated from University of Madras. He's a fellow member of the Institute of Chartered Accountants of India. He's a fellow member of the Institute of Company Secretaries of India and a honorary member of the Association of International Accountants, UK. He passed Insolvency and Bankrupt Board Limited exam in 2017 and now applied for membership from NISM, National Institute of Securities Market under SEBI, as a registered insolvency professional. He has served as an independent director of Chennai Petroleum Corporation Limited, nominated by Ministry of Petroleum National Gas, Government of India, during 2013 to October 2016 for a term of 3 years. He has also served as Chairman of Audit Committee and Chairman of CSR Committee of Chennai Petroleum Corporation Limited. CAG Ramaswamy, FCA, FCS, hailing from Coimbatore, has become the President of Institute of Chartered Accountants of India for the year 2011-12 by the 21st Council of Institute on 12 February 2011. He was serving as Vice President of the ICAI for 2010-11. He has been a Council member of ICAI from 2004 to 2013 for consecutive 3 terms. He also served as the board member of International Federation of Accountants for 3 years term, elected in November 2011 to 2014. He has served as president of ICAI for the period 2011 to 12 and vice president of ICAI from 2010 to 11. During his presidential and vice presidential post, he is chairing the following committees: Standing Committee, Executive Committee, Examination Committee, Finance Committee, and Disciplinary Committee. In the non-standing committee, Editorial Board, ICAI, ICWAI, ICSI, Coordination Committee, and various other committees. He's an ex officio member of the non-standing committees of few, let me name only a few committees: Accounting and Standards Board, Committee on Auditing, Accounting Standards for Local Bodies, Auditing and Assurance Standard Board, Committee on Banking, Insurance and Pension Board of Committees, Committee for Capacity Building, and various other committees. As council member during the period 2012-13, he is nominated as Corporate Governance Policy Committee by Ministry of Corporate Affairs, special invitees to NACA's Member Quality Review Board. He is practicing as a chartered accountant since 1984 and a managing partner of a leading firm in Coimbatore. He has been representing before all income tax and IT appellate authorities. CAG Ramaswamy sir is a prolific speaker and he has addressed various national and international conferences. He has presented papers on various professional topics, taxation, Companies Act. He is a keen golfer and member of social organizations. With these few words, I hand over the session to you, sir.
Thank you very much. Thanks a lot for the nice introduction. I am not new to our members in Madurai especially, though that Mr. Mohan Sundaram has taken the view that there's a formality is required to introduce the speaker. I am thankful to him for this nice introduction by the secretary as well as the chairman. I have seen the very senior member, Mr. CVS Manian, is in the virtual meeting. Thank you, sir, for your continuous involvement in our professional development and participation. My chairman, Mr. Shivakumar, is also there. When I was the president, he was the chairman. And all the past chairman, Mr. Ravi, Daniel, Tamburaj, and many of them, Sridhar, and Sudhakaran also there, his name is there. And the current regional council member and the past chairman of the SIRC, Mr. Dugar Chand Jain, the great motivator for many factors in the southern region. And he's really has invited me. That day he called me, sir, you have to come. Then I have no other words to say no. I have to participate. Such a nice person is conducted very elegantly that the regional conference at Madurai, is a pioneer for all the regional conferences and national conferences in India. Thanks to Mr. Dugar Chand Jain for this inviting me and creating a great platform for our members to interact through this virtual mode all over India. Thanks to you and all the members. Especially my sincere thanks to the chairman and the secretary who have invited me for this budget 22 speech. I have just last 4-5 days, I have just seen that what is happening in this country. And prior to that, before 1st February, what was the expectations in this country from the common man relating to the budget? Is there as a hype created? Or is there as a great things will come for the common citizen? There was a lot of things, debates everywhere, every newspaper, every news channel. We have seen that the expectation in the case of a budget and so many things. And especially relating to the channels like NDTV, channels like our ET, and some of the forums like Confederation of Indian Industry, Chamber of Commerce, and trade associations, they have expected a lot out of this budget. You know that last 2 years, our country has faced, and not only our country, all over the world, we have faced a great setback because of this COVID-19, and this pandemic situation has completely changed the lifestyle of each individuals. Not only each individuals, the functioning of the trading activities, functioning of the manufacturing centers, functioning of an export, import, every aspect has been completely changed. The functioning and as an economic activity has been directed towards a different line. In fact, last year when the budget was presented, the Honorable Finance Minister has come out with a lot of suggestions. They have given a number of measures. There should be a credit facilities for the manufacturers, extending the credit facilities. Further, there are a lot of other areas which they have given a relaxation and relief for the manufacturing sectors and the MSMEs. Many places we have seen that they have benefited out of it. Before this presenting the budget also, we have seen that one day before the economic survey also proved that there are set of a recovery path started in our country. And the last 1 year, we have seen that initially it was very nice. We started moving here and there. Suddenly the new wave of Omicron they started, and number of problems have come out before the common man. They were not able to withstand in certain aspects. Fortunately, the effect is very less. The recovery path is slowly moving further. That's one thing which is happening all over the world, and especially in the number of countries in Europe, they have already started for giving a freedom to the citizens to move around without any greater restrictions. So we have also now started that in our country also. The restrictions are maybe a relaxed way, and implementations are started. The elections are going to come. The investments are coming to India, and the huge amount of investment. Tax collections are going up. So many things are happening in this country. Slowly the schools and colleges have reopened. So many things are happening. So slowly we are limping towards the normal circumstances. So the normal life which we are expecting in within about 1 or 2 months will give us a great boost for our economic development. Then, in spite of all these things, the reforms started by the government on many areas, like economic reforms, bringing certain areas where there is a liberalization policies of disinvestment, handing over this Air India, the loss-making company, now it is Tata's, which proved that which are going to get, the loss-making company is going to be a profit-making company with the effective governance of the Tata Group. Tatas are one of the pioneer in our country with a disciplined form of a governance. Naturally, they are going to revive this airline and prove that their governance is going to be taken care of in other areas also. Because of this pandemic, the world became very small. All over the world, people are sitting before their laptop or computers or mobile phone. They were able to interact. They were able to learn. They were able to relearn. They have written their examinations and so many things. So that proved that the technology is going to rule this world in future. Now also, it's already they are taking about 40 to 50% of our functioning is only technology. Maybe more and more technology-oriented programs, more and more technology-oriented governance, more and more technology-oriented disciplines are going to come in this country, like universities. A digital university, which is they have already as promised in the budget, is going to be a very important concept for us. The brick and mortar is going away for constructing the buildings, for the malls, for the universities, areas of 100 acres, 200 acres acquired for the purpose of constructing universities. Educational students are going to be vanished, which we are going to sit at home. We are going to learn many things. Similarly, except the medical profession, all other professions now only depending upon the technology. Of course, the medical profession also in the Medical Council of India, and as well as the government has given some relaxation relating to the teleconference, telemedicines, teleconsultations, and door-to-door service. So many things are happening there. So to that extent, we can see that technology is going to rule. Very long back, about 20 years back or 25 years back, I have read the Sujata's novel about the genome. There's the entire activities will be controlled by the technology. So that is going to happen soon in the world. And we sit at home, we can debate, discuss, anything are happening. Now the marriages functions, 2,000, 3,000 people they have invited for the big marriages. Now only 200, 100 people are sitting in the marriage hall. Then videos are that streaming of their videos and everything all over the world. The relatives are sending congratulations messages, WhatsApp messages, viewing that the girl is very nice, the boy is very nice. Why there is this function is not there, like that they are asking. So the world changed, life changed. Similarly, our accounting profession also is constantly changing. Our profession is not an exception for anything. The blockchain technology now already has revived. Already that government has mentioned about this blockchain technology implementation. It is going to take away the many areas of this functioning of a governance relating to our audit as well as accounting professions. So naturally, the profession is to focus towards the technology audit, technology related economy, digital verifications, digital reporting. So many things are going to come in our profession also. So the artificial intelligence is going to play a very important role. Very last 6 months, we must have seen that, you all must have seen that the implementation of these income tax portal. Now you can see that file the return today, tomorrow morning, you will get the result. Either a refund, no refund, adjustment required, demand will be raised within about 1 or 2 days. See, imagine that the things are happening that many websites as promoted by the technology driven consultants, you file your return through their technology driven website for a very small amount of payment to that extent. So the filing of a return, number of softwares have come. So what is in store for all of us is focusing towards good governance of our companies, providing support through technology, providing support through our opinions, through using our technology and knowledge, and interpreting the law in a manner that will be useful for an economic development. Today, the faceless assessment is a classical exam for all of us. You are not going to the income tax department. Imagine Mr. CVS Manian must have visited so many times for the income tax cases, many times in the corridors. I myself, Mr. Ravi and Sivakumar, many of us. Now we are seeing that there will be a faceless assessment, and we are searching the Google map. Where is the income tax department office is there? You just ask for a new chartered accountant. You just go to and meet some income tax officer. You just take that Google map and drive the car and go there to the income tax office. Gone are the days sitting in this income tax office. Your GST gone. Your role and responsibilities, our audit has gone, but our reconciliation has to be carried out by us. The e-invoices are going to catch by the movement of the goods. E-passports are going to come. Huge amount of investments are going to invest in this budget. You can see every nook and corner of this country. Villages will be supplied with all these broadband facilities. People sitting in that now work from home. My close friend and relative he was working in San Francisco. Now he is sitting in a village. He's doing the work with using an off pant and nothing is there he's sitting before the computer, eating an apple and everything. Is doing his work. So imagine all over the world, the work from home is going to be a great concept. A knowledge-driven industry in India, knowledge-driven universities, knowledge-driven, technically strong personalities of human beings in India, they are going to rule in the world. See, not only this technology side in the case of consultants in information technology, but the accounting profession is going to rule in this world. The very strong accounting profession in our country is going to play a very important role, provided we should prepare ourselves for the technology. So the budget, you can see the investment in this budget is mainly for a technology development, reforms. So many matters are come up when you are sitting in this, when you're watching the speech of the FM. Lot of jargons, lot of materials, lot of information have been shared by the finance minister. 1 hour 25 minutes, 1 hour 30 minutes. She has given the complete focus about this, the country's perspective for the next 25 years. And she has given the fundamentals, how the collections are happening, this GST collection, the highest collection happened in January 2022. And the highest collections happened because of the various collections of the whatever the budgeted, they crossed the budgeted estimate in the collection of direct tax. So many things have happened. The reforms in the form of a number of cases number of laws have been completely omitted. New laws have been enacted for the benefit of the common man and for the development of these nations. With this, I would like to share relating to the finance bill. So we know that you all aware of that many things have happened in this finance bill. Let me just share with you certain areas of the finance bill, which I thought I can share with all of you only for a few areas so that we can have a complete picture about the finance bill. Okay. I will just see that. I go with code. Where is that? My finance bill. 1 minute. I have to. I will just take 1 minute, my exit full screen. I'll open my. Yes. I hope you can see that. Hello?
No, sir.
You're able to see?
No, sir.
You have not shared it.
Ah, okay.
Not it, sir, not it.
Okay, I can share it.
At the bottom, you can see shares.
Yeah, got it, sir.
Yeah, got it.
Okay.
Got it. Got it.
Sir. Yes, sir.
You can go for the presentation mode, sir.
Right. Mr. Zuhair Jain has mentioned about this PM's Gadi Shakti. Our PM Modi has paved a roadmap for the development of during 75th Independence Day celebrations. Term it as Amrit Call for the next 25 years. trust-based governance in a planned theme. What is trust-based governance? Note, put a trust on all the citizens. You are always correct with the government, complying with the government regulations, complying with all the requirements for the benefit of the common man, economic development. That's a trust-based governance. So in this budget, they have introduced PM's Gati Shakti, National Master Plan, which paves the way for achieving Amrit Kaal. The plan is considered for transformative approach of economic growth and sustainable development. So this is the transformative approach for an economic growth and sustainable development. We have seen that in the past also, a lot of reforms started. So it is a new form of reforms or a message to the citizens of India that government is planning for a greater growth, especially an economic growth, and it should be a sustainable development. It's not a development for a year, or it cannot be a development for a next election. It's towards the sustainable development. So he put 7 plan in this engines for this. Roads, very important for the development. Railways, time immemorial. The railways played a very important role for the development of this country and economy. Airports, of course, there is a lot of developments, ports, mass transport, waterways, and logistic infrastructure. Imagine these 7 engines, if you put together and if they work in tandem, if the people are able to work with type of on all these 7 engines, if the drivers of the 7 engines are good, naturally we can get a very strong economic development in this country. Next 25 years, what is the competency development for our country is we have to compete with internationally. We have to prove that our economy is very strong with our rupee value should be more or less equal to the dollar value. What is today's value is to be, we have to compare it. So our rupee should rule the world along with the dollar. That's the one thing which is very important for the growth. What is the finance bill objectives? Continue reforms in direct taxes through tax system through tax incentives, removing difficulties faced by the taxpayers, rationalization of various provisions. This is very important now. See, every time, maybe in the year 1922 or 1961, now we have seen that all the provisions in section under the Income Tax Act 1961 more or less completely changed. Reforms, only the name is there, Income Tax Act 1961. But other provisions, majority of the provisions completely modified, changed, either by legislative interpretations or by the Supreme Court or by the High Court. After for nullifying the Supreme Court and High Court, the amendments have been carried out. This budget, this finance bill also is not an exception to that. I have seen that first time there are a number of decisions of the various High Court, Supreme Court, High Court, Tribunal, about every provisions, interpretations given by the Supreme Court. Every provisions, interpretations given by the High Courts, Tribunals have been completely taken into the picture. It has been, you can see the memorandum, all the case laws have been completely explained by the finance minister about how this particular provision has been interpreted by the High Court, how it has been interpreted by the Supreme Court and the tribunals. So all these things they have considered it, and finally they have taken, so with a view to give a legal sanctity for the court orders, or view to give the intention of the legislation, they have made a lot of amendments. That is where remove this rationalization of the various provisions. Then what are the amendment? Rates of income tax, promoting voluntary tax compliance, reducing the litigations, socio-economic welfare measures, widening and deepening the tax base, revenue mobilization, phasing out exemptions, rationalization measures. This is the main concept which they have prepared for the Finance Bill 2022. First one is rate of income tax, surcharge rate and alternative minimum tax rates. Second, promoting voluntary compliances, reducing litigations, introduction of 139(80A), tax payment 140B, litigation management, clarification treatment, health and education cess, assessment in case of success of a business, expenditure in relation to exempted income, curbing of misuse of conversion of interest into debentures. Then socio-economic measures, COVID forced extensions, additional tax incentive for the International Financial Service Center, extending NPS benefit for state government and employees also, deduction of annuity for a disabled person, exemption of amount received for a medical treatment on account of their death due to COVID-19, exemption of amount received for a medical treatment on account of COVID, and facilities of strategic disinvestment for a public sector companies, widening and deepening the tax base, and then extending the scope of TDS on immovable property, TDS on benefit of perquisites on business or profession, widening scope section 285B, extending its application of bonus stripping and dividend stripping to securities to plug the loopholes, revenue mobilization, how they are doing taxation of the virtual assets, virtual digital asset definition they have given, withdrawal of the tax concession given for the foreign companies' dividends. That is also a very interesting area for revenue mobilizations. Phasing out exemptions, sunset exemptions, certain exemptions which are all given for a non-residents and those who are living in India for a certain treaty that has been completely, exemptions have been withdrawn. Rationalization measures relating to your assessment, faceless assessment proceedings. Number 2, rationalization of provision for a charitable and charitable trust and institutions, maintaining some books of accounts for them, penalty for an unreasonable benefit to the specified person, cancellation of a registration, specified violations, bringing consistency about the accumulation provisions, clarity of taxation of certain circumstances, taxation of certain income of the trust institutions, option for treating voluntary contributions, and clarification on application of income and everything they have given. Then you other rationalization measures, ease of refund of a person denying a liability to deduct tax, widening the tax base, section 68, deferment of faceless schemes, approval of notice 148, approval of notice 148B, clarification what constitute an information under section 148, time limit for issue of notice under section 149, change of periods, deemed possession of for the information section 148, issue of NITs in 148, investment or expenditure is made for 1 year, capital gain on goodwills, miscellaneous. So these are the broader areas for the purpose of completing the finance bill. So this finance bill contains about more or less about 84 to 86 amendments. Maybe some of them are clarificatory, some of them are plug the loopholes, some of them are the making reforms in the certain areas, some of them are revenue mobilization, some of them are putting some intention of the legislation and it has to be followed. So that is the one issue completed by the finance bill. So now rate of tax, we all know that the rate of tax is for all the people. We are happy with that. Many of the what Mr. Duhar has mentioned very rightly, you read, you are not reading. Somebody says it is not for the favor of the poor and downtrodden. Somebody will say it's a rich, it is for rich. Somebody will say it is a very good budget. So many things have come. But luckily, there is no change in the individual tax rate slab and everything. That one thing is saved us from interpreting. You have seen that last year, normal provision, then new provisions. When somebody want normal provision work out, somebody want new provision you have to work out. You have to explain to them how this tax liability, how you are not eligible for your ATC, why you are not eligible for other provisions. Explain everything. Luckily now everything is by hearted. We all know that now while filing the returns. Now recently we must have seen everything. So no change in that. That's the one thing we should be happy with that. Of course, there is a lot of issues relating to the long-term capital gain with the surcharge. They have reduced to 15%. That will be a good thing for a long-term capital gain. They have reduced to surcharge for about 15%, and it was the 37%, and it has been reduced to 15%. So many other proposals relating to the reforms in surcharge. They're all benefit for the cooperative societies and all of them. For that, the cooperative society also AMT, that comes about from 30 to 15%. The earlier cooperative surcharge of 12, whereas the total income exceeds 1 crore. There is some slabs like 7% and 12%. And all these things, the societies are going to, cooperative societies, mainly of the farmers and some of them they are going to benefit out of it. That's the only thing which I have to say, that in the case of a surcharge, number of changes. or good changes have happened for the benefit of the taxpayers. No changes happen in the tax rate for the benefit of the professionals to understand, and we will explain to all the people so that citizen can relax. There will be a consistency in the tax rate and the slab rate. Very interestingly, this year, the finance bill carried two important new provisions. Updating of return under section 139(8)(a) and the payment of tax under section 140(b). Promoting voluntary tax compliance. So how this provision is going to help? The income tax return can be filed up to December 21, 22, 31, 12. Now it's an exemption. What you say, that is there are certain exemptions they have given, that is all different. For an 139(1), 139(4), 139(5), only the July, October, November
sir,
of the returns.
Sir, once again, sir. Ravi sir, you'll have to mute yourself, Ravi sir.
So the return on section 139(1), 31st July. Return on section 139 for a cases tax audit, October. Transfer provisioning, November. Then you can file your 139(4) return before December, 139(5) revised return before December. That's all. Nothing can be done. In case if you have omitted anything, there is no way to file a return. So what type of omission will come? Many times we have seen that in the case of a genuine omissions. What are the genuine omissions? For example, a assessee, taxpayer has purchased the property. The stamp duty value will comes about, say, about 1 crore, but he has paid only 90 lakhs. So there is two important aspects. The seller has to go for 50C. So the buyer come for this 56. So there is a nature of an income for the buyer, nature of a capital gain to be computed based on your 50C. Similarly, in the case of business people, and 43CA also is covering and all these things. So consider all these things. There may be certain genuine mistakes. So an opportunity given to the people. Genuinely, they have not included certain income, and they are ready to include it. They want to pay the tax. There is no provision, because its provision has to only by 148 notice should come to them. They have to file and they have to do all the processes. So government has given an opportunity for filing of the updated return. Period is 24 months, 2 years from the end of the relevant assessment year. 31st March 20. So assessment year is 2021. So 21 to 22, 22 to 23. So 2 years available for them to update their return, whatever the mistakes they have committed. When they are not able to file it, or they are not able to get the information at the time of filing, or later on they found there is a mistake. Your filing of a revised return time is over, your belated return time is over, time limit given also over, but now you have an opportunity. So this is the one genuine opportunity given the people who have made a mistake. Lot of interpretations. Can I add an income which I thought I want to offer it as an income, but I failed. Now can I add it in now? So for example, certain credits which you want to offer it in original return, but you are not offer it. I want to offer it in next updated return. Maybe certain things which we have to be very careful on that. Updated return is for a genuine mistakes. For example, that because of certain provisions like 68, then amendment is there. So they say it in case if you are not able to prove this genuineness of the borrowing, so many other things, it will be deemed to be an income. Your rate of tax is different. Can I offer myself and file it? Can I go for the different updated return so that I can get the benefit out of it? So that is the one which they have given in the case of an updated returns. There are certain conditions for an updated return who are eligible to file, who are not eligible to file, what type of return can be filed. So there is a provision for payment of tax. In this case, how the tax has to be paid. They have given 2 time limit. If you filed an updated return within 1 year, if you filed an updated within 2 years period, then what type of a tax has to be paid. So the 140B is a proof of tax has to be accompanied. The total tax they have mentioned is aggregate of tax plus interest plus additional tax plus applicable surcharge and cess. That is the one calculation they have given in 140B. So such person is required to pay additional tax on etc. So where updated return is furnished before expiry of 12 months from the end of the relevant assessment year, the tax return is you have to compute as it is and work out the tax, interest put together, and all that you have to pay additional tax on that amount, 25% of the aggregate of tax and interest payable on additional income reported up to the return. In case if it is more than 12 months, you have to pay 50% of the aggregate of tax and interest payable on the additional income reported and updated return. So who are not eligible? So this is a simple return they have given, simple opportunity they have given. Okay, you file your return, update it. If you are genuinely mistake, you can update it. Pay some compensation for that. So 25% or 50% additional tax and the other interest, that whatever calculations given under section 140, you pay it. It's an opportunity for completing your. What is the purpose? Why the department is not going? They are not going to identify how they will identify. In case if there is a search conducted by them, in case if there is a survey conducted by them, your tax liability is different. But before such things, section 139.1, 139.4, 139.5, you are not recorded, you are not filed it. At least if it is filed before 139.8A return by you can update a return, you will be able to prove that you have disclosed to the department. So then what is the case of, in the case of a 139.80, you are all the following conditions. Suppose you want to file a loss, then this is filed even for a person who has not filed. Person filed or not filed also. Filed, they can update it. Those who are not filed the return, time limit is over. They can also file an update return, regularize their compliance with the income tax department. But in the case of an updated return, you cannot file a loss. You cannot reduce your total tax liability. You will not ask for the refund. You will not ask for the reduction, the increase of your event. And you will not be able to file reducing your loss also. That I mean increasing your loss also. So and the same, they already filed 139.8A return, update return. You are not eligible to file one more for the same year. So these are the conditions. And in case if there is search conducted by the under section 132, books of accounts have been required at section 132A, a survey conducted in the 133A conducted by them, or any money, bullion, jewelry, everything is found in the third parties records, which your name is also into that, you are not eligible to file the updated returns. So that means a person who has genuinely made a mistake, immediately rush, he can file it, he can escape all these things. In case if there is anybody, any search, survey, all these things happen, or somebody's survey, your name is there, your record is there, whatever you recorded is also there available with them, which is not disclosed. These people are not able to, they are not eligible to file these returns. Similarly, in case if an assessment is pending, reassessment is pending, recomputation is pending, these cases are also not eligible to file the updated return for that assessment years. And sometimes there may be money laundering cases are there, benami cases are there, black money tax cases also there. And then there are certain cases relating to which are all not accepted under the law. They're all not eligible to file the returns. Similarly, there are certain communications or information in the hands of the assessing officers. That information is with the assessing officers, communicated to the assessee himself from foreign sources. Prosecution launched. These persons are not eligible to file updated returns. Board may specify in future who are all not eligible to file the updated returns. Coming to the questions relating to, I have mentioned about this updated return. Why this updated return? I have explained it. You can escape from future problems. You have to pay an additional tax. If you are able to pay immediately, your additional tax is only 25% of that entire amount due. And then In case if there is an additional, if it is 1 year exceeded, then 50%. So it's only leave it to the taxpayer, those who are genuinely mistaken or those who are want to pay and disclose it now also. It may be somebody can say, ask them, it's a voluntary. It's a voluntary. There is no restriction for the people. There is no notice will be issued. You file your updated return, all these things. It's only voluntary compliance. Somebody may ask, is it a voluntary disclosure? Maybe you can treat it, but the disclosure is only for a mistakes. If I look into that, if there is a mistakes or you fail to disclose it, and there should be a very careful in disclosing all these materials. It not be 68, 69, 69A, all these things are unexplainable in income and all these things. If there's such things are there, in case if there's an updated income is taken for some verifications, that will be a problem for them. Then another very important relating to Mr. Jain also mentioned about health and education. This is the number of plethora of cases has been mentioned in the memorandum of explaining the classes in the finance bill. Why this health and education? Number of interpretations. Health and education says surcharge and all of them is not form part of a tax. They have taken a view. Court have taken a view. Yes, it is not there. Some courts have given. Tribunal very recently in Calcutta again, it is not like that. Intention is not like that. It should be a form part of a tax. So for a clarificatory in nature and retrospective, you see the cases effective from 2005. All those who have claimed health and education just as or a surcharge as an expenditure, business expenditure, that has been completely retrospectively nullified. So in future also, it should be treated as an income tax payment under section 40A2. It should be disallowed while computing in income of an individual, company, or anybody. That should be, we have to keep it in. It's only a clarificatory amendment. Then coming to the expenditure, another expenditure. Strengthening disallowance of illegal expenditure, section 37(1). All your expenses are covered up to 36. Maybe in 28 also certain expenditure which are all, for example, you have given a purchase advance. You are not able to recover the advances given in the course of a business. Maybe you don't have a specific section. Either it should be allowed under section 37 or it should be allowed under section 28. The faceless assessment interpretations, I have seen that many times. In case if you want to get to be treated as a bad debts under section 36, provision is very clear. You should have incurred, you should have made some, sales and all these things to the earlier. So unrecoverable part should be considered as a bad debts. But you are given an advance for purchase of a goods in the course of your business. It is not covered under the as a bad debt. So people said advance written off is not covered under the bad debt. Then 37 is in one section which is covering all those expenditure which are not specifically covered, which are all incurred wholly and exclusively for the purpose of business, should be allowed under section 37(1). So purchase advance also many times we have seen that it is not allowed. So now that section 28 is always available for the businessman. If any advance is given and that in the course of business will be allowed as an expenditure in section 28. Then coming to 37(1), very important is an expenditure should not be incurred for the violation of or prohibition of any of the offense under any law in India. So a lot of interpretations, especially in the case of doctors. Many pharma companies are providing support to the doctors. They have given all facilities. They have given the tour programs. They have taken them to abroad. They have given them all the gift and many items to the doctors, especially the medical profession. They were able to get all these things from the pharma companies for the prescription of the medicines. So Medical Council of India have given, and under the ethics rules, they have given doctors should not accept any of these things. It's prohibitory under the law. So when the things are prohibitory under the law, if somebody is giving, and what is that? In that case, what should be the position of the pharma companies? Many companies, a lot of decisions have debated and discussed in this finance bill memorandum. Finally, court have also accepted that this is a prohibitory one. It cannot be accepted. Though the argument of the pharma companies, the laws and regulations relating to ethics is only applicable for the doctors, not for us. Doctors are not incurring, we are incurring. So court have said, no, it is not an intention of these provisions. So they said, okay, that's the thing has come. Now they want to have a complete revamping of this particular section, so that any prohibitions under any law within India, some of them are tried that I have violated law outside India. This section is not applicable to violation of outside India. I paid my penalty, I paid an incur expenditure. That should be allowed as my, for example, if there is a violation of exporting of goods, and when opening in USA or somewhere, some levy has been used, or some of the declaration given, we have not used the child labor for manufacturing of these goods. They found something wrong. They asked them to pay some penalty. They paid. They said it is not a penalty or an expenditure incurred is outside India. It should not be considered as an expenditure disallowable under Section 37(1). So to that extent, they have given an explanation. So expenditure incurred for any purpose, which is an offense under or prohibited law in India or outside India, it cannot be allowed. Prohibit any benefit or perquisite to a person, and acceptance of such benefit or perquisite by such person in violation of any law or rule, regulation, guidelines governing conduct of such person. You see that professionals like architects, chartered accountants, lawyers, company secretaries, doctors, all of them are regulated by the respective professional institute. So that regulation says you should not accept anything from any of your clients, any of these supporters of the pharma companies. So these are all prohibited under the regulatory provision on that particular person. You are giving a person which is prohibited, that is not to be considered to be allowed an expenditure. Expenditure incurred to compounding of offense under any law in India, outside India. So there are a lot of interpretation. I am just compounding of law is not it's not a violation. It's only compounding. I'm accepting, I'm paying the compounding fee. It should be treated as a business expenditure. I don't want to go for a litigation. Why the compounding? Compounding is I don't want to go for litigation. So I compound it. So I paid to buy peace, to avoid litigation, prolonged litigation, to avoid all complexities, I have paid my compounding fee. It is only a compounding fee, it should be allowed. But they also mentioned it, any expenditure incurring for compounding of any offense under any law in India or outside India is not be allowed. It's really a strengthening of an illegal expenditure with the support of the court, and it will avoid all type of complexities in the computing an income of a person. Then another very interesting, curbing mischief of conversion of interest to debentures, Section 43B. We all know that Section 43B, whatever mercantile system you follow, whatever method you follow, your recording in books of accounts, certain expenditure will be allowed only on actual payment. One of such expenditure is you borrow from NBFC, banks and all of them. If you are not paid the interest within the due date of filing of the return, then that will be treated as a not allowable expenditure under Section 43B. So a lot of things have happened. Interest has been capitalized and they have taken it's a deemed payment, court have allowed, and finally an amendment has come. In case if you are not paid the interest to the bankers, NBFC, all of them borrowings, but you cannot be converted into another loan, it not be allowed. It's not an actual payment. It's not a symbolic payment. So many things it has come. Very cleverly people have started. Okay, I am not making it a loan. I am not making it to any other form of this one, but I will start issuing debentures. NBFC has given me 100 crores. I am not able to pay. I will give them my debentures. I will give some instrument for them to equal to that amount. So they have started that. So now that has been also to be clubbed to avoid the litigation, to give the clarity to Section 43B. In case if there is any conversion of an interest payable to debentures, claiming it is a constructive discharge of interest liability will not be allowed. And it's not actually paid. It should not be considered as actually paid. So this is a very interesting amendment in the case of converting the loan, converting the interest payable into a debentures or other instruments. It's only it's only a very strong way they have given. Expenditure should not be allowed. Next, you come to the socio-economic welfare measures, COVID forced extension. We have seen that a lot of perquisites people are given amount paid by an employer for an expenditure actually incurred for the medical treatment for a COVID and everything. So they have started as a perquisites. Then interpretation started when you are getting an employee certain benefits, it will be perquisites. So they have given a clarification, it should not be treated as a perquisites. Even if your family members are getting for the benefit of the deceased person, for any other person in the case of a COVID disease, that also to be excluded, should not be treated as a deemed income. And it should not be more than 10 lakhs rupees, and it should be paid within 12 months from the death of a person, the family member who are getting that one. So this is only a measure which are all giving some benefit in this during COVID seasons. There should not be a misinterpretation. Law should not be interpreted in a straitjacket manner. There should not be a punishment for the taxpayers and really the sufferers. It's a measure towards the socio-economic measures. There are certain, you all know that International Financial Center, that's the lot of offshore derivatives, and they are given more and more benefits for that the non-resident section 10.4E, 10.4F, and 10.4G. All these fund managers, those who are getting that, so that the idea is bringing more and more foreign direct investment in this specific IFSC centers. It will all be a measure for bringing more foreign direct investment through the mechanism of giving an exemption through the Income Tax Act. What is the increasing the revenue? One is plucking the current expenditures, which are all the real expenditures to be allowed, increasing it. Giving a voluntary disclosure, bringing more revenue by voluntary compliances of filing of updated returns. Reducing the certain expenditures will not be allowed. And then giving certain concessions through the act where there is a really a tax liability will come, which given to be given an exemption for the COVID affected people and family. And there is a new concept, taxation of virtual digital asset. We have seen that for the last few years about the cryptocurrency. There are a lot of cryptocurrencies, debates, discussions, and slowly in the last few years, maybe about last 10 years it is there. Last few years, this cryptocurrencies, the concept and transfer of cryptocurrencies, investment in cryptocurrencies, cryptocurrency stock exchanges in abroad, and certain people have started there. There are the pioneers for cryptocurrencies in India. So many things have started in the last few years. Very long back, the late Arun Jaitley has very rightly mentioned that cryptocurrencies are not recognized. They're all not recognized one. It's to be treated as an illegal one. So now we know that even there is no recognition for the cryptocurrencies, but people started for exchanging, people started at working on that because more and more digital world is there. So naturally their transactions are happening. In fact, it's very long back, this blockchain technology was invented by this the drug mafias earlier. They use it for this blockchain technology for cryptocurrency transfer. So many things that they have taken it to that for that purpose. So internationally, cryptocurrencies in many countries they're recognized, but in our country, the cryptocurrencies is not legally recognized. That is one thing which we have to consider it. But simultaneously, the FMS mentioned that digital currency is going to come for us. That's when RBI is working out the Indian digital currencies are going to come. So cryptocurrencies is not a currency of India, it's currency of foreign countries or anything. It's a digital value item. It's a non-fungible tokens include within the meaning of the property. So section 247A, what is a capital asset property that has been included as a property? So you are not seeing that cryptocurrencies. You are seeing that. You are virtually making a transactions. You don't know that how that valuations are happening. But all this still we want to make it very clearly. It is called as a property for the purpose of income tax, though it is not legally considered as a legal one. So that is the one which we have to keep it in mind. So illegal currency has been recognized as a property for the purpose of for the Income Tax Act. Why? Because the wide range of debates, discussions, transactions are happening without any checks and balances, without understanding how the people are earning money out of it. So to that extent, it has to be focused for bringing into the tax system. So similarly, if there are anybody is giving a cryptocurrencies as a gift, it is also coming under section 56(2)(10) as a taxable income in the hands of the recipient. So 115 BBH, any income generated from the transfer of a virtual digital asset shall be taxable at the rate of 30% with effect from 1st April 2023. So we know that 30% tax, but how do you know these things will happen? How the transactions are happening? Where is the checks point? Suppose X is an Indian, a taxpayer, holding PAN number, resident, transferring certain cryptocurrency transactions with another person, Indian, resident, and in India, and maybe an international transaction also. But what is happening is those who are covering under that, consciously, they have to deduct the tax. 194, yes, they have introduced for transfer of a digital asset by a specified person at the rate of 1%. So only way which we can identify the transactions are by way of identifying the TDS provisions. Of course, persons, individual HUF, the business is less than 1 crore or a profession less than 50 lakhs and aggregate a value of up to 50,000, there is no need that. And that if another person, if it's less than 10,000, then naturally these provisions are applicable. What is the deduction available? I say I have purchased for about 1 crore of cryptocurrency. I'm selling it for about 1.5 crore. I have incurred expenditure, for example, maintaining my office, so many things, even though it is not recognized, I have spent some amount and all these things. So my net profit is so much only. But as per the law, only cost of acquisition allowed as a deduction, any other expenditure is not allowed. So straight away, it is a purchase cost, cost of acquisition cost, and transfer cost. What is the difference between these two? The transfer price between these two will be treated as a taxable income. Loss not allowed to be set off against any other income. In case if you are incurring a loss, I purchased for 1 crore, I sell it for about 50 lakhs. 50 lakhs is the loss. This loss cannot be set up with any other income. Loss is not allowed to be carried forward. So that's one-time transaction, profit or loss, leave it. Profit, pay tax, loss, forget it. This is the cryptocurrency. And certain exemptions, which are all very important. Cryptocurrency, I can tell you that we can talk about what is meant by cryptocurrency. Cryptocurrency is an other than Indian currency, other than foreign currency, and there are a lot of tokens, so many other things and descriptions are there. If you read that entire description, you will understand what type of thing. Then you go to the website, go to the Google and put one by one, you can know that what type of a cryptocurrencies, what type of a token, what is meant by the fungible token, so many things you can understand that. So the law is very clear. These type of an assets, what type of what are the assets they are given? These are to be considered that. Then phasing out certain exemptions. Exemption, I have already mentioned that in the case of a foreign individual's income of an individual assigned duties in India in connection with the cooperative technical assistance, those who are coming to India, they will stay here. For that, their income is being exempted. And remuneration and fee paid to the consultants for the work relating to the coming from foreign state and staying in India, their family are staying with us, their income and everything along with them. These are all the exemptions for a long time we have given. Now it has been completely withdrawn. Coming to another very interesting point relating to assessment processes. Faceless assessment proceedings of 2. At present, we are seeing that faceless assessment proceedings. Section 144B is governing the entire faceless proceedings. The faceless proceedings is consisting of the verification unit, assessment unit, technical unit. So National Faceless Assessing Center is the nodal center for entire faceless assessment proceedings in India. There are certain assessment unit, regional assessment unit, technical unit, review unit, all of them are there. So the returns will be processed by the first identified by the National Faceless Assessment Authority, center, forward to an assessing unit. Assessing unit will ask for the details, questions, and forward to the National Faceless Assessment Center. Then in turn sent to the notice to the assessee. Assessee has sent the details to them, and it has to go to the assessment unit. Assessment unit may request the National Faceless Center for refer to a technical unit or maybe a technical unit for verifications, corrections, and coordination with all these areas relating to other verifications. Then it has to go further. In such cases, in assessment unit, if they feel that it's need for a technical support like accounting support, auditing support, interpretation support, legal support, technology support, then they refer to the all these things. So you all more or less we have settled with the faceless assessment proceedings. Certain changes which they have made in section 1 to 8 are all very few points, except the last point which has been omitted. Section 144(9) deals with the assessment proceedings becoming void in case non-compliance of the procedures specified section 1 to 8 is omitted due to technical issues arising from use of information technology. The number of cases, now you must have seen the number of cases by the High Court. They have completely cancelled the faceless assessment on 4 points. The time limit given to them is very less, 4 days time, 2 days time. Certain times draft assessment orders are not been served on the assessee, and they are not wait for the show cause notice. They are not wait for the reply from the assessee. In certain cases, the reply filed has not been technical unit have not properly verified. Certain cases, the procedures laid down under section 144B has not been fully followed. So specifically for an assessee asked for a video conferencing for representation of a personal hearing. So there are certain concepts which is only they can take a decision whether it has to be allowed or not. It should be allowed or may allowed or shall be allowed. So the court have taken in every case there should be a hearing, should be allowed. So all these things they have taken for complete process of bringing into the another form of faceless assessment proceedings with complying with all the regulatory measures, standard operating procedure. They have made some changes. Finally, in case if there is a violation of standard operating procedures, the law says your assessment order is void. You cannot enforce it. So instead of that, they removed that one. So any infirmity, any difficulty, or maybe any shortcoming in this process, it has to go through only for appellate procedures. Appellate authority has to verify the procedures whether the National Faceless Center, National Faceless Assessing Center has followed all the procedures, referred to the assessing unit, got the reply are processed by the verification unit, reply filed by the assessee has been verified, technical unit has given support, then assessee has given an opportunity to file a reply. Whether he is not followed it, what is 144, the best judgment assessment has to be followed or not. And in case if assessee has filed a reply, the draft order has to be followed, and the draft order objection has been filed by an assessee or not, it has to be followed. So this is the entirely a standard operating procedure has been completely changed, except one where there is anything which you are able to prove that there is a mistake because of non-compliance with the rule due to the technical issues. You can't claim that assessment order is null and void based on particular provision that they have removed it. No, it's the only we have to see that how these courts are going to view in the orders passed in the faceless assessment proceedings. So that is why that I have mentioned about faceless assessment, reassessment, recomputation under section 143, scrutiny assessment, reopening assessments are there. All these units are specifically fixed in this process. So nothing we have to add on that. Let us wait for that. The provision section 1 and 8 recasted has to be applied for the current all the faceless assessment procedures. In case if there is anything is not followed and only it's an appellate procedure, you cannot go to a writ procedure and say this is the law is specifically mentioned that in the 144(b)(9) that in case of not followed assessment order is void. So it is we have to wait and see how this process is going to be implemented in future. I'm not developed on the lot of things relating to communications and everything are there. One point is having regard to the nature, complexity of the accounts, volume of accounts, doubts about the correctness of the multiplicity of transactions, etc. The assessing unit, upon recording the reason in writing, required the National Faceless assessment center to invoke section provisions 142 of the Act, forwarding the case to the jurisdictional PCIT, CCIT. If such request is not accepted, the assessing unit shall proceed to complete the assessment in accordance with the procedures laid down by the proposed section. So there are maybe a chance for doing some special audit which may come. So the special audit can be carried out by the chartered accountants. So you should carry out only by way of a virtual mode or maybe a technology mode. You have to do that. Coming to the very interesting area relating to charitable trust and institutions, accumulation provisions, so many things. The last 5 years, the charitable trust or the institutions from last 5-6 years are every finance act, there are a lot of issues relating to this charitable trust and institutions. Right from the accredited tax, if the non-compliances, your accredited tax will be at the value of the entire property enjoyed by exemption, 30% you have to pay the tax in case you are a violation of the any charitable trust or institutions. There are two exemption regime. One is on section 1023C. There are about university, education institutions, and institutions are running with the aid of the government, without aid of the government, and the schools and etc. Last year they set up to 1 crore. They're all they need not file a. They can get an exemption straight away. They've increased to 5 crore for an exemption without complying with certain things, registration, so many other things. And these two areas, section 11. 12, 13, section 10, 23, all of them are very common. So to that extent, there is a very interesting point. So far, they have not included a very important area of maintaining a books of account. This time they have included maintaining a books of account is a mandatory for all these things. It was not mentioned in the earlier. So that is the one which they have included. Just I want to see that what is the purpose of these amendments? Ensuring their effective monitoring and implementations, bringing consistency in the provisions of the two exemption regimes, 1023C and section 11, providing clarity on taxation of certain circumstances for violations. They want to provide certain things. Say 1023 institutions and the trust. We all know that re-registration started last time because of pandemic. Now it is up to March 2022. You can file your re-registration of the existing trust. Many trusts they filed. Initially, it's called a provisional registration. Afterwards, you can go for a permanent registration. So many things have happened. Earlier, it was there every year you had to file for a registration. Then a perpetual registration. So many amendments have happened in the case of a charitable trust, because it is a trust which is all completely exempted from the tax, and they have to work and they have to function as per their objectives. Certain times there are a lot of things have happened in the case of a trustees. Trust interested persons. The certain properties may be diverted towards the interested person to the trustees. Funds may be given to them. There may be an expenditures incurred for the benefit of the trustees or the interested persons, those who have given a donations to the highest donation to the trust relatives of the trustees. There is section 13.3 as very given, who are all the trustees and all these things. Apart from the withdrawal of an exemption, if you are giving your trust property for the benefit of the trustees relatives, and the highest donor, all these things are specified person under section 13.3, then naturally the exemption will be withdrawn and there will be a levy of tax also. There are a lot of interpretation whether the tax should be to the portion of a violated area or the full area. That's the interpretations are coming up. Only a portion can be paid tax, others can be given exemption like that. But by and large, now the amendment is very categorically mentioned in case if there is a violations and the exemption will be withdrawn, registration will be cancelled. In case if there is a registration is cancelled, the trust will become have to pay under the accredited tax on the value of the entire market value of the property at the rate of 30%. That's very clear on that. So the same provision is inapplicable for 1023C for all these purposes. So if any money given, they have introduced a new penalty section 271 AAE. Many of you are doing the trust audit. You must have seen that how this 271 WAE. Apart from this, non-filing of a return itself is that your trust exemption will be withdrawn. So these are the things which we have to keep it in our mind. So new penalty. Your violation will come for many penalties are there. TDS violation will be there. You are not filed in time, or you are under the process of verification. There may be certain other violations. The levy of penalties are there. So 271 WAE is first time if there is a penalty, they found out by the assessing officer that the specified person has enjoyed this property some equivalent to the amount of income applied for a specified person will be considered as a penalty. In case if the second time also they found 200% of the amount equal to the amount applied towards the benefit of the specified person will be considered as a penalty. See, is there? For example, your trustee enjoyed, say about 1 lakh worth of property, 1 lakh income of the trust. It is proved. So penalty is 1 lakh. Second year also is doing that. It's become second time. It's 200 penalty, 2 lakhs rupees a penalty. So this they have introduced to regularize, to monitor, to see that the income of the trust should not go to the beneficiaries of the certain people who are all under section 13(3), public charitable trust. Trustee should not enjoy the property. That's the one concept which they have clearly mentioned in that. Certain income taxable at special rate without specified income. Taxable rate is 30 protections. For example, the certain expenditures, they are given certain specified income they are given. The word application also they are given what is an applications. For example, violation. For example, if that more than 20% of the commercial income is coming for the trust or the beneficiary is 1023C, there that income has to be taxed separately. And if they are not maintained a books of account, in the case of a business maintained, that income has to be separately taxed. Apart from violations, this income has to be taxed at the rate of 30%, and all the deductions, regular deductions for earning of the deduction has to be allowed. And there is another very interesting point relating to section 1023 cases as well as section 11 cases, application. So the trust or 1023 cases institutions, 85% of their income has to be applied for charitable purposes every year. In case, if they are not able to apply for 85%, they have a two option. Number one, because of the amount is not received within the due date of 31st March, which you have received on last date, which cannot be spent within that financial year. So they can carry forward next year by filing Form 9A, and they can spend it in the next year. In case if they are not able to decide, they decide this entire amount has to be accumulated for a future particular purpose. So they accumulate it for 5 years period. They can accumulate it and they can file a Form 10 and they can disclose in Form 10B filed with the Income Tax Department. So Form 10 you file, equal amount has to be deposited in the bank or instrument specified section 11(5) of the Income Tax Act. There's certain bonds and everything verified. So that within 5 years period, that accumulated fund has to be applied for the purpose for which it is accumulated. Board resolution, so many things are there. If it is not accumulated, 6th year it will be treated as an income. Whereas in case in 1023C cases, institution cases, it will be treated as in the 5th year as an income. So parity with that, all the cases, 5th year it will become an income like that they have given. So to that extent, 5 years extension period is given to all of them. So application. So what is an application? For example, you have given all these things. Somebody started a mercantile basis of books of account I am maintaining. So my salary payment is due on 31st March. I have to pay a supplier for about 1 crore rupees. I have received the material, I applied for that. So what they said, actually applied, your provisions are not applicable. Now receipts and payment basis, you bring out all your income. Only actually applied for the application will be considered by this amendment with effect from 1st April 22. So now for 31st March 22, we must see that actually they have applied. The provisional entries are not going to be useful for an application purposes. Keep it in your mind. So I have already mentioned about this and expenditures which are all not within the objective, which they have found that it has to be considered for the purpose of separate taxation. They have given that also. Compulsorily, they have to maintain a books of account and other documents. And the accreditation tax, the exit tax will 115 TD, TE, TF are applicable for the institutions also that they have included. And another very interesting is relating to the renovation of Gurudwara, mosque, church, and everything. Now the trust can take a decision. It can be kept, even though it's given as a voluntary contribution, keep it as the corpus donation, keep it separately, keep it apply only for that particular purpose. Keep all the 85% you apply it. In case if you're not applying, you can ask for that for the next year applying for the forms will be notified. And you apply everything only for that particular purposes. That is they have given, that's for renovation of all temple, mosque, Gurudwara, churches. Even though it's a voluntary contribution, the trust has an option to treat it as a corpus donation. So that 85% of the existing income, you need not bother about that for all the areas. That is only for trust. Trust I have given only very few points, but a lot of other points are there. Minor points are there in the trust. There are about 4 or 5 explanations for the explanations. So if you read that entire provisions relating to the trust exemption can be withdrawn. That's now that they have given on a specified violation. Violation for non-filing of a TDS return, non-filing of the non-complying with any law, violation for a non-applications, or in case an assessing officer is found that during the assessment proceedings the funds have not been used for an objective, they can do that. So once a cancellation notice is issued, within 6 months period they have to pass an order by the principal commissioner or commissioner of income tax. Now they have the authorities for exempted commissioner exemptions or authorities for granting a registration, cancellation of the registration after giving an opportunity. So there are a lot of other points which you have to keep it in mind in case if there is a violation for non-compliance of any law, non-compliance with the income tax department, objectives are not fully followed, or use of property for the benefit of the interested persons, if it is notified or noticed by the income tax department, or any other informations they have taken from their from the other information they have received based on certain information from the income tax department risk management policies, that is also to be considered for cancelling the registrations. So these are the major point which I would like to mention about this trust. You please kindly go through that. 190 for IA, transfer of properties. We have seen that transfer of properties other than agricultural land, if it is more than 50 lakhs rupees, you have to deduct the TDS. The person is paying the money has to deduct the TDS. There may be certain issues relating to whether the amount I paid for purchasing a property or the stamp duty value. So in consonance with the giving a clarification, stamp duty value or the actual consideration, whichever is higher, has to be taken into consideration for the purpose of 1% TDS. It is a mandatory, they have to deduct it. Then there is those who are non-filers. All these cases, there is they have earlier mentioned about 2 years period. Those who are not filed the return, if their TDS income, TDS TCS is more than 50,000 rupees, higher rate of TDS has to be applied. Now that has been reduced to 1, instead of 2 years, they have reduced to 1 year. That is the one which is required to be followed for TDS provisions applicable now. I have mentioned about this, the payment for perquisites, benefits, etc. Many business entities now paying benefits to the people in the form of conferences, seminars, or any of this, their gift, or taking them to foreign tours. So many things are happening. So there is also, if there is more than 20%, 20,000 rupees, 10% and section 194, the TDS regime will be applicable for that. And certain amendment relating to goodwill. Last year, the goodwill are said they are not eligible for a depreciation. When you are withdrawing whatever amount, when you are transferring a goodwill or for some other cases, when you are already enjoyed as a depreciation has been reduced, balance amount to be taken for a cost, and you have to work out for a payment of capital gain on these things. And there is another amendment relating to this. Last year they made what is slum sales. There is an omission. They have, instead of sales, they have entry added as a transfer. Set off and carry forward losses, very interesting. After a search survey conducted by the department, many times people have seen that they have undisclosed income under 68, 69, 69A and all these things. They have taken into that this income has to be set up with the earlier year carry forward losses. Now they are very clearly mentioned that in case you have a carry forward losses, keep it for your genuine business income. Don't adjust with this undisclosed income. It's not to be allowed. That's the one change which they have made. Dividend, I have already mentioned that dividend income which they are getting a foreign companies, that they have that exemption has been withdrawn. It's an improving the income of the this one. Facilities for strategic disinvestment. A lot of disinvestments are happening when there is more than 51% of the voting right goes out. The carry forward losses that has been not allowed. Now they want to do that strategic investment. They want to allow it for this carry forward loss to be continue to be enjoyed by them. Then there is a reassessment. We all know that last year there is a complete recast of the reassessment, 147 notice to be issued. Earlier there should be an information, reason to believe, so many things. Now last year they meant in case if there is an information available, they have to obtain the permission from the higher authorities. Then they have to issue 148A notice. Then 148 notice order has to be passed. And then after their objection, then they have to issue notice. So they have simplified for once you 148A opening for collecting information. If you have got the permission from the previous, higher authorities, you need not go every time for the purpose of their approval and all these things. That is the one they have given. That 50 lakhs form of asset is an asset including an expenditure. That is also because number of times events are happening, marriage events, so many things are happening. Expenditure they have incurred. Where is that expenditure? So that expenditure also to be deemed as an asset. Somewhere you have a investment is there, your expenditure. So that is also there in 148. The reassessment procedures also recasted in such a manner. The reopening go up to 10 years period. The 50 lakhs has to be aggregate of 10 years period can be considered. Expenditure also to be considered for the purpose of if it is more than 50 lakhs, if there is a records available with them. Now that very simplified records, information from the any authorities of the department, information from court, information from any other authorities, audit objection, all will be considered as an information for the purpose of reopening of cases. So beyond that, I don't want to do that because there are section 133A 5 information is required. They said it's opened up for all the informations in case of a survey also. So litigation management, in case if there is a law relating to litigations, if the CIT appeal pass an order, the option has been given to the assessing officer after discussion with the assessee. If assessee agreed, if the panel is also agreeing that they can file a petition before the ITAT within 60 days or with the High Court in case if the similar nature of the assessee's case is pending, we can wait for the finalization of that law related issues. Then they can wait. In the assessee says, no, I am not agreeing with that, they can go ahead for the regular procedures. It's a litigation management. Succession of business, we have seen that many times. One is merger, acquisition, merger, demerger, so many things are happening. Court have taken, if any of the entity is merged together, you cannot make an assessment because assessee, the entity is not available with you. It is merged with that. And in certain cases, these are the cases approved by the court saying that when there is no merged entity, you can't make any assessment proceedings. So merging will take, for example, if you go for merging of A limited and B limited, the NCLT has taken is a lot of process. It will take your appointment date maybe on 1st January 2022, but your order will come in the 31st March 2023. So during this period, the action taken by the department will become nullified after the merging. They said the appointment date is prior to taking an action. So you cannot take action on successor. You cannot take action on the predecessor also. So law is very clear that successor is liable for all these demands, proceedings raised by the income tax department from the appointment date to the final order. And they will be given a modified return of income can be filed. That is also that updated income, modified income, return filing regular income, revised return, belated return. All these things are now available for us to understand the law relating to compliances. Similarly, in the case of an IBC, insolvency in bankruptcy court, when there is a resolution plan is given to the NCLT, NCLT will pass an order. In that case, there will be a demand reduction by the income tax department. So when your demand is reduced, you don't have a provision to reduce the demand raised on section 156. They have given a note 156A. The assessing officer can, based on the order, they can reduce the demand, all these things, modify such demands. So it will be complying with the insolvency in bankruptcy code. Friends, these are all only an overall picture. I can give you certain bits and pieces about the important finer prints, but only thing is we have to read, reread, learn, unlearn, and then again learn. This is the process of this new budget finance bill. Though only 84 or 85 amendments, but each amendment is required a debate, discussions, and interpretations, case laws, and what is available for, is it applicable for 2021, 2005, 2023, 2024? Certain provisions are there. Like, for example, you take an appellate procedures before the ITAT on a faceless mode, 2024. So many things are TPO now eligible for a revision under 263. All the TPO orders, all these things are coming up. So read one more time. First, you read all the memorandum explaining the classes, then read the articles. Of various articles are available and interpretations, and you can definitely have a whole idea about this finance bill and its amendment proposed. And I once again thank the organizers, especially my friend Jane and the chairman, Mr. Mohan Sundaram, and Secretary Mani Meghalai, all my senior present in this virtual mode. Thank you one and all. Thank you very much.
Thank you, sir. We gratitude you for your elegant presentation on the budget 2020-22 with lucid explanation, sir. It is very useful to our members, sir.
Thank you, sir. Thank you.
Now the floor is open for discussion. Any members raise questions by unmute yourselves and raise questions, please.
Sir, this is Vijayan, CSK. See, we are claiming the educational access for the past 3 years. So for 2021, 1920, we have claimed the educational access as an allowable expenditure and filed the return. But no scrutiny assessment taken till date. So now, in view of the updated return, can we file updated return withdrawing that cess as not allowable expenditure? Whether any interest, my premier point is, because it is not my mistake, it is only because of the retrospective effect, I have to withdraw my claim. Whether penalty interest will be levied on such additional income, the additional tax or not?
100% everything will be levied. If you go for updated income return filing, 140B is inapplicable. All calculations as per 140B, you have to work it out.
Okay. Right. Thank you.
Dear sir, you may also add tomorrow if the department now later goes for changing the order, then what happens? Whether they'll be putting interest and penalty, because the amendment has only come now.
Yes. No, that is the one. Normally, that's one in these type of amendment. They will, though it's an retrospective in nature, cases are pending before any authority will be covered under this. In certain times they have given, it will not be reopened, but it's no, there is no such guarantee as given in this. Correct. In many times, the law itself, they said it will be applicable, though it's retrospectively, even because those who are litigating and litigations are waiting, they will face the problem. Suppose a matter is pending before the maybe High Court. So at that time, they can ask, retrospective amendment is there, please kindly don't allow this one.
Sir, one question.
Yes, sir.
With respect to the same education chess the assessment year 1920 and 2021, we have filed the return. So
Okay.
can we revise the returns now, sir?
You don't have time, no, to revise the return.
Already over.
Over.
Okay. So now the assessing officer only come by passing an order and it
There is
get,
an assessment, they will
adjudicated,
ask
right?
for that.
Okay, okay. Fine, sir. Thank you.
So what about cases where the assessment is over? They are through, right, sir?
They are through. We can say as on date. But if
there
there
will be
is a case is
possibility.
reopened,
Yeah,
for
reopen
some other
possibility.
reason, cases reopened for some other reason, then it will surface. Once a case is opened under section 148, whole case is open. Any point which are all against the law will be considered for that. So because this 148, 148A and authorities approval, so many, and this faceless assessment, people have to read twice, thrice, and we should prepare ourselves because Institute has also come out with certain suggestions for the people. We have to ask for the time. We have to file it in within the time limit because we are getting only 15 days time limit only every time they are giving. The court very recently found that in many cases, the time limit given for 7 days, 2 days, 3 days, 24 hours are not considered as a valid time limit because principles of natural justice demands a reasonable time. So we should prepare everything within the reasonable time. Because the National Faceless Center will send all the reply, whatever the assessing questions, whatever the assessing unit are asking. There is a technical unit. They are also giving some report. That is also they are asking. There are certain verification unit. They verify the documents which we produced along with the others. Because suppose you are giving a statement relating to the amount borrowed, these are then they directly send to based on the PN number. They are sending the parties mail asking whether you have given a money or not, and explain the source. Because section 68 now they are clearly mentioned in this amendment, the explaining the source of the next layer also we have to explain. So now it's becoming a tough for keeping credit entries. You have to be very clear. Evidence should be required. Hope I think we have reached correct time.
Yes. In fact, if there are no questions, I would like to ask one more, sir.
Yes, sir, please.
See, regarding this VDS and TDS, a lot of time the transactions happen between exchanges which are not in India also. How this is going to work? Any guess? I know the procedure will come, but any guess how this mechanism is going to work where?
No, actually the foreign informations, for example, as a non-resident Indian, if he files a return in India, so transaction outside India, the assets outside India is not covered. But if he doing business with the Indian, so there may be certain checkpoint will come.
No, sir. I'm talking about a resident Indian who buys a cryptocurrency through some exchange. Today, I'm able to make a transfer because till some certain amount there is no need for me.
Resident Indian. Suppose resident Indian is getting cryptocurrency from exchange outside India, and when sell it, so there is a profit element will be there.
Correct. So that time TDS, because they say you have to deduct TDS.
TDS, the other person has to deduct now. But here, the TDS provision, though it's not applicable, but you have a record for transactions.
Okay. Okay.
Now it's a very tough only, but definitely that the technology advantages with the government, like blockchain technology, AI, I think there will be tracking will be very easy for them. There is no doubt at all. Only thing is that
probably they will have to involve exchange.
Professionals should gear up towards the technology advantage with us.
No, only thing is in this they have to involve exchange also. Otherwise, it is not going to be possible.
Yes.
Because it is only the exchange who has the information of the buyer and the seller.
No, because India has already entered an agreement with various countries, for tax informations.
Okay. Okay.
So that tax information agreements will provide them all the details. Like for those who are invested in outside India, their tax informations. With that, we are getting all the information. Many countries in a double taxation avoidance agreement they have entered, tax information agreement they have entered. So their information will come to the India. So in case there is an exchange, is there an exchange in that country, there is a mandatory requirement for the exchange to forward all the information. For example, you are more than 40 transactions are under the tax net now. Our tax information, TIS, annual information statement, tax information statement, 26 AS, if you look into that, the large number of transactions are coming up. This year, we have seen that offline transactions of the listed securities, that's all coming, not through stock
In
exchanges.
fact, it is giving almost a horoscope, financial horoscope of the past.
Financial horoscope.
Sir,
So
whether
now
it is
expenditures. One more thing is, in the case of film producers, they have to give the details of an expenditure within 30 days from the end or the closure of the completion of the production. Now it has been included event managers, short film producers.
But that is transactions beyond 50,000 only now, sir.
Yes, they have taken. No, all these things, short producers, all of them, now you are producing a film and uploading it to the YouTube. All these expenditure people are going to come. Event managers are going to come. Those who are taking an event management in a big way, they're all going to come into this picture. That's why now a lot of event managers are there. They are outside the purview. Every year late only they are filing their returns. Now event managers are giving one figure, and the person who has conducted he has paid the money to that is giving another figure. It will be easy for the department to identify.
Right, correct.
So today's present situation, this budget, I can tell you the reasonable amendments are there, and there are a lot of other areas relating to tracking mechanism is very high now. Tracking the transactions are very high. It's better. AIS, TIS, 26 AS is the very important for us to verification of all the details. Just give this horoscope for before going to filing of a return. These are the documents, you give answer for us. That's all. And it is reducing the work of the chartered accountant. If you are go on asking what is this one, what is this one, what is it, they are giving every day one information. Now you can take a printout and give it to them.
So
These are the first
the return filing has become a marriage where you have to match the horoscope before going for it.
Correct. Now it is there automatically. Now it's going to pop up in your return itself. That's the one best way. Only thing is, we must work very hard on this technology side. That's the problem for us, all of us. That is why I've seen one recently. A person has called me a branch chairman. He's going to take over as a branch chairman. I told him every month or every week, you call 25 senior members, ask them to sit with you, chat for about 1 hour. No discussion. Chat, give them a computers, laptops, let them work whatever they want. Give some ideas. Then they will understand. Then you bring that person qualified less than 25 years, then 10 years, 5 years. Mix them after 1 month. So they will understand. So give them a time, 1 hour. Just, it is not for that. See, earlier we have a study circle meeting. Senior members will come, sit together, somebody will present, debate, discussion, so many things are happening. Now it is not happening. At least 20 people can call, give them laptop, they have to work on laptop. Give them, let them watch a movie, let them watch one PPT, let them watch one thing, let them type one letter. So that will give them a feel of involvement. Then you can add with the youngsters. Right, sir, I think there is no questions. I once again thank the entire team of Madurai branch, the past chairman and the senior member, Ms. C.V.S. Manian, Daniel, all of them for this wonderful opportunity to meet all of them through virtual mode. Thank you, one and all.
Thank you, sir. Thank you for your sharing of rich knowledge on direct taxes, sir. We are very proud of your presentation, sir. Thank you, sir. And now I request the secretary to give vote of thanks.
Good evening, members. On behalf of Madurai branch of SIRC of ICAI, I thank our today's speaker, past president of ICAI, respected CAG Ramaswamy sir, for accepting our invitation. Thank you very much, sir, for your wonderful presentation on
Thank
budget 2022 with practical examples. And also thank you very much for your patient answering of our queries.
Thank you. Thank you. Thank you.
I thank our ex officio CA Dungarchand U. Jain, sir, and Chairman CA Mohanasundram, sir, for arranging this session by inviting a prolific speaker, CAG Ramaswamy, sir. I thank all the senior members and other participants for attending this session. Let's stay home and stay safe. Wishing you all a happy weekend. Once again, thank you very much, sir.
Thank you very much
Thank
for
you,
this
sir.
wonderful evening. Thank you, one and all. Thank you.
Thank you, sir.
Thank you, sir.
Thank you.
Thank you, Ramaswamy, sir. Looking
Thank
forward
you,
to
sir.
the
Thank you. I'm leaving.
occasion to invite you in physical mode.
Thank you.
Yes, sir. Yes, sir.
Thank you, sir.
Thank you, sir. Now the meeting is adjourned. Thank you.